Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. You guys watching the peso? Man, I'll tell you, I like being long. I know a lot of people are not liking this right now, but let me tell you something. This is going to be gnarly if we go. You guys have seen this chart, and I'm gonna talk about it a little bit here. I know we're going to go into specifics. Matter of fact, I might as well just go ahead and do this on the bias chart since I'm going to do it anyway. So it's going to go on here. But I want to talk about this currency pair because it really really chapped my hide a day ago. Okay, so if you look at the peso here, all right. You know, I've been nibbling on this on the long side, so let's just talk about how I've traded this thing, which hasn't been all-star-ish, if you will. Okay, so let's go back to you know, before the last couple of days. So here we are in the peso a few days ago. We know that this area, that's why it's highlighted in yellow, it's a huge support. It's not like, you know, support and resistance, as many of you know, it's not an exact science. If it was, we'd all be rich. I mean, come on, let's face it. You know, if it was such an exact science, you and I, we'd be freaking rolling in gazillions of dollars because it's perfect, right? And you know, perfection in the markets would be, it'd be something, but markets are less than perfect. All right, and we just know that this area, we knew that this area is a big area where you got to start looking for some support. All right, you got, you know, resistance here, support down here, support. You can see the spikes have held here, spikes have held there, spikes have held up here, you know, spikes around there. We got spikes around here. So this whole area is support. We knew that. Okay, so you know, I started establishing a position basically at 1732, I think originally is where I started owning it, somewhere in that neighborhood. You know, on the other day, not yesterday, it was like on Wednesday, we spiked below this low at 1717 and we went to 1716. My stop was at 1720 or something like that. I had half of my position stopped there. I had the other half deeper, but I got stopped out of half my position. And at that moment on Wednesday morning, I said, the market just stopped me out. Market pushed far enough, stopped me out of half my position. I had told everybody in the chat room that you know, our Wine Street chat room, I said, hey, listen, I never get stopped out. When I get stopped out, it's usually a reversal. I mean, it just is, just because that means the market pushed so far that it's actually triggering like the deepest of stops, which is usually a pretty good indication that we're going to reverse. So I went and bought some more. Okay, and so my cost average is like at 25 or 26, and so you know, my cost average is there. Then yesterday during the, you know, end of quarter portfolio rebalancing or whatever, I widened my stops because I knew that it was going to be volatile, and I managed to survive through this. But we hit, you know, basically a new low, posted a complete reversal, bullish engulfing pattern, and then, you know, we've been off to the races ever since. Now the risk is, and I sold some last night. My cost average now is 1719, just so you guys know. I mean, I'm up 2,000 pips right now on the peso, but I sold some of it last night just to keep it tight through non-farm payroll. But here's the thing, we have what we call a descending wedge. If the peso breaks higher today, like let's say we clear 1750, this thing's probably going back to 1820, 1830. I am a peso bull, so you know. Meaning that I believe the US dollar Mexican peso peaked here. I don't know if it's generational, like that's a generational high. I'm not too sure if I'm a believer of that. But as you all know, I have been short the dollar Mexican peso since, you know, upper 18s. And I've been riding it lower, and I've been hoping for a bounce for a while, but now I think the bounce is coming. I do want to be a seller. somewhere over here. 1820, 1850. I am going to sell the living crap out of this thing somewhere up here. I don't know where it's at, somewhere around that X, okay? Could be down here, could be up here, but I'm going to sell the peso above 18. That's where my ultimate, you know, trade is going to be. But for right now, if you're chasing the dollar peso lower and you're buying pesos, you have to be very careful. It looks like we want to put on a squeeze, and not a good squeeze, not a little squeeze, like a manly type of squeeze. We're coming out of a descending wedge, guys. So here's the thing. All right, well, let's just talk about support today. Support today is, as long as we remain above 1720, I think that's support. Any dip now to 1720, anybody who's caught short, they're covering. Because if you got caught with your pants down yesterday, which I bet you a lot of traders did, I saw a lot of crap talking yesterday. So I'm assuming that they're caught with their pants down. They're going to want to cover on any dip to 1720 now. All right, any dip to 1720, and it doesn't have to be 1720. It could be 1722, 1718. It'd be 17 around that area. I think you're going to see a lot of people trying to cover. They're going to be like, "Thank God I could get out down there." Now, here's the flip side. We're right at resistance. I mean, this is 1742. I don't think we're going to break it this morning. Well, I don't think we're going to break it right now while I'm speaking, but we could. If we clear the 1742, you're probably going to see you're going to start to see a pretty big squeeze. Okay, that is previous support, current resistance. We broke a pretty gnarly downtrend line. I'm not counting that resistance there because I don't know if everybody's got that same data point, but I know everybody's got that data point, 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 which makes it 5 touches. Okay, so if we get a reversal here and we start clearing the 1742, we are going to squeeze, and it's going to be a gnarly one too. Good gnarly. Okay, so just keep that in mind. All right, let's go into the euro dollar. That's where I should have started, but I wanted to go to the peso just because, you know, I just tweeted about it. The peso looks pretty squeezy. All right, here's the euro. So where do I think the euro can go? I think the euro can go to 115 on a weak number. If the market's right, look at gold just getting clobbered right now. I hope no one's long gold right now. I hope. Anyway, if you're looking at hold on one second. Okay, if you're looking at the euro dollar right now, the euro dollar is in obviously relentless rally mode. And I showed you the weekly charts. This is a lot of touches right here, lots of the 115 level. 115 would be the underside of that previous trend line. Now this was a channel that we all thought was going to break down as a flag pattern, or at least I did. But when Janet Yellen basically became super dovish at the beginning of the year, it's like, oh crap, it looks like she's one and done for now. You know, obviously the euro couldn't fulfill its destiny of going to 80 cents at that point in time. So now we're you know, bouncing back. We broke the downtrend line and here we are. Now we're challenging some pretty major resistance. I am going to be a seller today above 114.50 all the way to 115. Depends on how weak the number is. I mean, if we get a weak number, I'm just making that assumption, which is not correct. If the number comes in at one, like let's say, you know, 160, you know, we might actually tag 114.50, 114.70. If it's a really weak number, that's going to shoot us up to 115. Then I might be very careful about shorting the euro up there. But anyway, I think 115 is going to be a resistance. Now, from a let's check from a Fibonacci standpoint. If you take the last move, all right, so we take this high to this low, the 161% extension comes in at 1164. So you guys know I'm a big fan of the golden fibs. At a 618, 161% extension, universally I will almost always fade if I have reason to. So if we get to 161% extension today, I have reason to fade it. Numbers not that weak. It may have been weak, not that weak. I know we're up against a lot of resistance. 114.65. I'm a seller. Okay, it's key resistance. Biased right now. I know you guys might go, God, it's so bullish, Blake, but you know, frankly, I think it's in a range. You know, if you take this weekly chart, it's in a range. It's a big range. It's an ugly range, and we've been bullish for the last, you know, we've been moving up in a bullish type of fashion for the last couple months, but it's in a big range. All right, so just be careful about getting too uber bullish at the upper end of a range. Okay. All right, support. Where is support? Support in the euro dollar is going to be all the way back down at 113.40. If we break back below 113.40, all right. Now I know you can go, well, isn't Blake in support here? Well, you know what? I'll write them both down. Actually, I don't want to take away from the importance of this support either, because we're not too terribly far away from there. We have 113.72, I think was the high here. 113.76. I'm sorry. So it's 113.75. 113.70. Here, let me write this: 40 and 75. Okay, so two really key supports on the way back down. So you have 13.75 and then one right through here, right? 113.40. So let me tell you this, in my opinion, if we break back below 113.40, that's where the bulls, anybody who's bullish right now, anybody who's been buying the euro dollar, who's like, dude, the euro's going to 120, you know, ain't nothing stopping us now. Janet Yellen is so dovish, you know, so dovish. I'm so happy I'm peeing my pants, you know, right here, and it's a little warm. You know, anybody who's in that camp that says, oh, you know, the euro dollar is going so much higher, they will probably change their tune if we break back below 113.40. So if we break back below 113.40, they're going to say, oh, crap, I was wrong. Okay. So you always try to figure out where the threshold points are for bulls and bears. Like, you know, I'm not long the euro right now. Now, I am long the dollar Swiss, but I'm not biased towards the euro at this point. So I'm just trying to figure out, okay, where are those pressure points? Right now, you know, anybody who's bullish the euro, that's probably where their stops are at. You know, we get back below 113.40, they're going to say, you know what, I'm done with this. I don't want to be long anymore. Okay, let's talk about the cable. What a piece of crap. I covered my short yesterday for 65 pips last night. We had this, you know, we had this shooting star on Wednesday, neckline resistance. I was very skeptical about us breaking out of the inverted head and shoulder pattern this early. I don't think the symmetry's there, and that's why I was, you know, I got long. I played the cable pretty damn good the last weeks, as most of you know. I bought it on Friday down here at 141, or Thursday on 141. I sold it at 142.85 right there. I sold it at 144.10, I think, is my cost average for the last couple of days, and then I covered it for 65 pips. So I played it pretty well. I mean, I bought it here, sold it here, bought it here. Okay. Unfortunately, I was a little early, premature. I've never heard that I've been premature. Never heard that before. Okay. Hey, come on, it's Friday. You know, can't we laugh a little bit? Okay, so anyway, some of you are not finding that so funny, but you know, where else are you going to talk about currencies and being premature at the same time? Nowhere. Go find that somewhere else in the inner sphere, inner web. All right. Yeah, call me the Minute Man. I used to be the 2-minute man, but now I'm a 30-second guy. Anyway, okay, jokes aside. Let's stop joking. All right, this is serious business. We're trading. I don't give a shit. I just lost a few $1,000s. I don't care. Let's talk about being Minutemen. All right, so anyway, we're coming up to trendline support here in the cable. I do believe that this is key resistance. You can short it against this, you know, because your risk is manageable, right? This is the neckline. So if you get a rally back to, like, let's say we get a rally anywhere close to 144, why not fade it? Because you know your risk. You can throw your stop right above like 144.80 and say I'm risking 80 pips to make, you know, 400 and move back down to 140. Great risk reward if we can get a short off somewhere up here. I'm not saying that that's a guaranteed, but you know, if we have a weak number, perhaps we do get up to 144. I don't think it's, you know, I don't think it's unreasonable. But you know, you gotta think, okay, well, where is it that, you know, where is it that traders are gonna, look for shorts? You know, realistically, down here is going to be right through here. That's going to be pretty good resistance on the way up, but that's not too far away. I mean, we're only talking about another 25 pips from where we're currently at. So let's get rid of this. Like if we can, you know, if we can get a rally back up to, let's say 143, what is that, 143.60? Yeah, it's probably not bad resistance for today. You know, we got some, you know, we got the spike high up here, the overnight high. So I'm assuming that's going to be resistance, right? 143.60. Support right now is just below where we're at. You have to imagine that we're stopping pretty close to this trend line, which means that we're probably close to a 38% retracement, right? We're getting close to a 50% retracement. So this is going to be support right through here. Let's grab that. Let's move right through here. You see we actually stopped on the spike high, but I'll give it a little bit further. Okay, right through here. So support is going to be at roughly 142.65. We break through that, you know that that was a strong dollar move, and you know, the cable is going to get hit a little bit further. We are in a range in the pound. Let's go over to the Swissy. I'm long the Swissy. I'm down right now 26 pips in my cost average. Okay, I'm long the dollar Swiss. You go, Blake, why are you long that piece of crap? Well, you know, because we're back testing right now a 12-year broken trend line. So if you go back to the weekly chart and you go all the way back to 2002, okay, and it's not drawn perfectly, but you can get the gist of it. 2001, excuse me. Data point. Here, let me zoom in now. Pre-Swiss National Bank debacle, you know, pulling the rug out from the Euro Swiss. Resistance, support, 95.50. It is a 618 retracement. That is ultimately the support level, and I'll tell you, I'll buy more down there if I can get it. 95.50, big support. Resistance right now, I'm trying to breeze through this now because we're starting to run low on time. I've been joking around too much. I should be more serious because trading is serious business. Let me tell you something. If you don't laugh a little bit in this business, you will drive yourself crazy. I can guarantee. I've been doing this for 20 plus years, and I've traded, I've lost a lot of money, I've made a lot of money, but if you can't laugh it off, you will die of a heart attack early. Yeah, and you have to smoke a lot of dope. Just get high as a kite. Just kidding. I'm joking. I don't smoke dope because when I smoke weed, which hasn't been in a long time, but if I ever do, I have a bag of Doritos and like a 2-liter Coke, and then I fall asleep in 10 minutes. So it's like the most boring thing for me to do. So that's why I don't do it. Anyway. All right. So look, this is where key resistance is. This is where from a 96.50 or so, that's where, if you know, that's where it starts to turn the corner. And obviously I'm hoping that we get up there, but if we break through 96.50, that's where people start to go, all right, we're you know, going back into the you know, probably back into the, you know, 97, 98 range. But this is where that downside pressure is going to get taken off. Pretty simple, pretty basic technical analysis. All right, dollar yen. Now, as you guys know, I've been short the dollar yen for forever and a day, and I can give you the charts one more time, but I'll do this because so many of you are just tuning in, right? Here's the Nikkei. It's down 3%. We talked about it yesterday. You know, talked about, hey, be careful if the stock market comes in. That means the equity markets, the Nikkei is going to crap the bed. It did. Okay, so now here's the yen. You see the yen? It's in yellow. All right. Here's the S&P. Oops. Yeah, there's the S&P. If the S&P rolls over, which I think it's going to pull back, after we did that double bottom extension of double bottom. S&P starts to roll over. Nikkei is going to get killed. It did overnight. Yen soon to follow. So now I'm happy about that, because if you look at the dollar yen, okay, you look at the dollar yen, we are really tagging some pretty key support. We have 112 that's been holding us up, but I'm going to say that that 618, which is 111.85, is even more important right now, because stops can get triggered even in the next half an hour. Don't fall for it. All right, 111.85. This is really key support. If that gives way, we're probably going down towards 111. We have a weak number or stocks get hit today, that's probably going to get tripped. Resistance is really easy. Resistance is right here, hourly. You can see it right through there. That's where the downside pressure gets taken off of the dollar yen, 112.60. Okay, 112.65. All right, guys, I'm going to take a 5-minute break so you can go pee, if that's what you got to do, or you want. And we are in a bearish trend, by the way. While we're below 115, it is bearish because we're in a head and shoulder pattern longer term. I'll be back in 5 minutes. I'm going to go grab some more coffee, or actually, I take that back. I'm just going to sip on my coffee because I haven't had a chance to. But I'll see you back here in a few minutes. Don't go anywhere. Thanks, everybody. And we'll be back to finish up the Canadian, Kiwi, Aussie, dollar index, Nordic currencies. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you back to this really sad excuse of a webinar and poor stand-up comedy that I'm trying to perform. Anyway, let's see. Okay, where am I at? What are we doing? Let's go over to the Canadian. So the Canadian yesterday, let's be very clear here, and I'm long the dollar Canadian right now. We had a very nice hammer formation. Now, one of the best things about a hammer reversal candle, in my view, is they're pretty damn consistent. You know, whether you're doing an inverted hammer, okay, at the high of a trend, do you see that? An inverted hammer or shooting star, whatever you want to call it. Yeah, you say tomato, I say tomato. You see that big long wick? You see that big red bar? Do you see it at the top of a trend? Call it whatever the hell you want to call it. I could care less. That's going to, more times than not, give you a stiff reversal. Then you do that on the other side, where you're at the bottom of a trend and you get a big green bar, big long wick, where people at the lows yesterday are going, holy crap, why am I short this thing? I'm stuck. That usually leads to a big reversal going the other direction. It's, you know, very consistent. Now, I don't know what the candle is going to look like later today, but for as far as right now, this is very consistent with reversals. You know, 80% of the time, I would say, maybe 78% of the time, you get a reversal. There is going to be that 20% of the time where it doesn't, but you know, we're about probabilities in this business, not about exact science, because there is none, right? But what I love about these type of reversal candles that you see here, you can see it at the high and you can see it at the low. The best thing about them is what makes that so unique, and what makes it so good? It's when it's a false break. False break. See, when you get a false breakout and a reversal, that just bends everybody over on the other side. Just rams it right up their nose. Yeah, it just, you know, that's it. And so when you're stuck on the other side after a false breakdown, when you thought it was going to be a continuation pattern, you know there's an 80% chance that trade's getting shoved right up your nose. So now the thing that we have to watch closely about the Canadian today is obviously crude oil. Crude's, you know, on the verge of a head and shoulder pattern. It's on the verge of breaking below 37.50. I know we're below 37.50 right now, but really just like getting a foothold below there. If that happens, you know, the Canadian could show a pretty big reversal here. Now, if you take a look at the, you know, channel that we've got in the Canadian, it looks something like this, right? Something like that. Okay. What that tells you is, again, we talk about pressure points. Where if you're a Canadian dollar, US dollar, Canadian dollar short, okay, where is it that you throw in the towel? You finally say, you wave the white flag and you say, all right, screw it, I'm out, I'm done, I'm finished, I'm finito. It's going to be up here somewhere. Okay, we're down here. It's going to be way up here. So you're talking about maybe a move up to 131.60 or so before people start to get really worried. You know, roughly, you know, somewhere up here. Okay, so I mean, we could theoretically still squeeze. You know, we're at a 38% retracement right now. We can squeeze up to 131.50 or so, and not really. Traders aren't going to worry too much about it. Anybody who's short, especially those people that are short, like if you think about, we had, I say we as in many of us, we were shorting the dollar Canadian aggressively right here, right? Now I covered my shorts right here, somewhere around here. Okay, but I'm also not an institutional trader. I'm a swing at best intermediate trader. So I'm not going to stick around for months on end, but I know there are a lot of people that do. You know, a lot of people were looking at the Canadian dollar like me and saying, dude, that thing is just beat up. It's so undervalued. I'm going to buy it. All right. Crude oil is going to bottom, whatever. Now, if you have somebody who's been longer term trading the dollar Canadian, they're really not going to worry until they get above here. You get above here, that's where you start, start seeing, okay, we're going back into the, high 130s, maybe even towards 140 again. All right. There's a lot of room between here and there. All right. So, we're talking about, a 618 coming into play, maybe at 131 and a quarter on a strong number, strong jobs number. Canadian numbers aren't until next week. So 1.312, I'm just going to write 25. Okay. That should be pretty significant resistance for today. We are in a bearish trend. I am trading counter trend. Everybody knows that. I've been talking about it for the last, several days. I am counter trend trading the dollar Canadian on the long side. My cost average is 129.60 right now. Okay, my cost average has dropped a little bit because I've been buying it. I've been buying it the last few days, but then I closed some out last night. So my cost average has actually got improved because of FIFO, but that's neither here nor there. What I'm telling you is I'm long the dollar Canadian. It's not a huge position because it's counter trend, and I'm very well aware of that. But you have to imagine if we have a weak number, which I think is a risk, where's support? Okay, if we have a weak number, people are going to want out. People see this. They're not stupid. They see the oh crap. We were playing musical chairs and I don't have a chair. The music has stopped and oh my God, I don't have a chair. We were playing hot potato and oh my God, I got the potato. It's hot. I want out. All right, I don't want to hold it anymore. Okay, so the question is, where's somebody who's short, got stuck on the short side? Where are they going to say, all right, thank God, get me out of this thing? I would assume right here. Probably right back towards the support. I bet there's going to be a lot of buyers down here. 129.50-ish, roughly. Okay, if we peaked. That's if we peaked. So whatever this low is here, this 4-hour low, 129.60. I'm sure there's going to be a lot of support down there. In this vicinity, there's going to be buyers. All right. Anybody who's short is going to be like, God, just get me out. I gotta get me out. I don't want to be short that thing anymore. All right. Let's go over to the Kiwi. I haven't been playing the Kiwi, but I should be on the short side of the Kiwi. I'm not, but it's pretty clear. Actually, it's extremely clear. The dollar Kiwi right now. And I should be short, but I got to wait till after we get through this day. All right, so we have this AB equals CD move, stopped us on a dime at or at 69.65. Yesterday we peaked, so we hit a double top. Now we set in the very, very important breakout point right here, right? Here, I should do it like that. I don't know why that red line is over there. And that means I need to, I know why. Because, okay, spike high, spike low. So we actually have to do this. So this is our range, right? There's our range. That's a double top right now, for right now. Let's delete that. So let's copy this, paste that, push it over here. Oops, push it over like that. Okay, so we know what our range extension is should we break down. That's a clear-cut trade to me. We break through 68.80 and you can just stick a fork in the kiwi. Resistance, 0.6965, okay? And I'm hesitant to say bullish because, you know, looking at this range here, you know, this range has been very, you know, very good at containing prices. I mean, we are trying to do a bullish breakout. I think by the end of the week, I mean today, if we can close, you know, above 69 cents, that's fine. But man, excuse me, sorry, getting up at 155 will do that to you in the morning. I will yawn from time to time, and I apologize. If we break through this 68.7 or 68.80 level, then you have a double top in place. Then you have a double top extension that takes you down to 68 cents. I am a seller below there, just so you all know. I don't know if we're going to get down there today, but I am a seller if we break through that. And I don't know if I'm going to sell the Kiwi per se. I might just short the Kiwi against things like I might buy the Euro New Zealand. I might buy the more Aussie New Zealand. I might sell the New Zealand yen. I'm not really too sure what I would want to do, but I might short the Kiwi dollar. I'm not too sure, but that double top or that range extension is very, very apparent to me, and it's very clear that we have a double top at this point. We just have not broken the neckline. Aussie dollar. Aussie dollar, we had another failed breakout attempt above 77 cents. Okay, you guys have to look on a weekly basis, and I have to assume the RBA is not particularly pleased with what's been happening with their exchange rate. There's nothing more than the RBA would love to have a 68 or 65 handle on the Aussie, and I'm sure they're looking at it right now, going, "Oh man," you know. And I begged and pleaded to get the Aussie up to 80 cents so I can short it, but you know, what I'm noticing here is we're getting a lot of rejections around the 618. We're getting a lot of failed breakout attempts. The 127% extension comes in at 77.35. So should we get up to 77.35, like let's just assume the euro gets up to 114.50, 114.60, 77.35 should be just another failed breakout attempt, you know, just another rally up here and possible failure. Now, support in the Aussie is pretty key to me because this is like the Kiwi. If we break through this support, that is going to put a hurt on anybody who's bullish. All right, and that comes in at 76.30-ish, roughly. The low here, what's the low? 76.35, 76.34, but I'm going to write down 76.35 because try not to be precise on support and resistance because it's not an exact science. We're bullish, and we've been bullish the Aussie ever since we broke above the this like 74-cent level. But you have to be very careful with this resistance here. Okay, let's go over to the dollar index. Okay, so the dollar index, let's go over to the daily chart. As you guys know, we're approaching some really key support, and if you don't know how key support this is, let me take the dollar index again, and let me take you over to a monthly chart, and let me just tell you how important this 92.50 is. It's so important. I mean, I blogged about it when we got down there, and I got long, you know, back there 9-10 months ago. It's super, super important support on our way down. So I think it's a little foolish to get really bearish the dollar while we're down, closing in on these support levels. I mean, just look at it historically, you know, over the last year, these are levels that have been, you know, posed very strong support for the dollar all through here, and we're there. Okay, so, you know, think you have to be extremely careful being too bearish at this point. Relative strength is divergent. If you guys can't see that, let me grab the RSI here. Damn it. Trying to, there we go. Okay, so as you can see, we're hitting new lows in price. We're not in relative strength. So with that being said, okay, with that being said, be very careful down here. We're going to look at our previous lows that were from yesterday. $94.30. It's not great support, but it's yesterday's lows basically. Resistance. We break above 94.72. Oh wow, we're gonna try to crack that support right now. Look at the euro. My God, man. Wow, euro's beast. Okay. 94.70. 94.75 is resistance. That'll take the bearish pressure off. Look at the peso. 1740. The peso is just going in your face, sucker. In your face. All right. Dollar index. We're getting towards the bottom end of our range. The peso has been bearish, but I kept it in a range. We've been in a range. We're getting close to squeezing the heck out of somebody. All right, we already went over that. Let's go over to the Norwegian krona. Oh man, very similar to the dollar index. Relative strength is not really breaking down. We're getting really close to support. You know, with crude oil as bearish as it is, okay, you guys got to. I'm actually considering buying some U.S. dollar Norwegian krona. I know we can go, well, it's a head and shoulder pattern, and you know, yada yada yada. We're breaking through all this. I know, I get it, but I look at crude and it's like, man, if crude continues to break down, this has got to be, you know, finding some support for a bounce soon. I don't think I want to deal with, well, you know what, I take that back. Let's get rid of this. 823 support. Like I said, I'm not going to be able to answer too many questions, if any, today. It's just been a busy morning. 8.23. Okay. 2350. Resistance. 840. I say it's bearish for now, but just be careful being too bearish down here. Let's go over to the Swedish krona. Swedish krona is approaching really key support too. Look at this. You want to talk about a mirror image of the dollar index? There you go. I mean, how big is the support right here at 8? The low is here is 802, 803. God, that's huge support, guys. If we break that, I would be very careful with being long dollars. Swedish krona has really a very good ability of leading the dollar index. Some of you have heard me say that before in the past. If we break through here, you got to be very careful. But we got a lot of support down in these areas, you know, through here. So resistance right now, this will take the downside pressure off. 814. Let's grab this. Let's go like that. All right. Okay, we're getting close to our range bottom, so be careful. Okay, so your bias chart is completely done. I'm going to, I should answer questions right now, but I don't want to. I really want to go look at